Hey traders, Nick Shaheen here, recapping the week ending 3/29. Another epic week. We've seen all kinds of action today. We're looking at the S&P minis, so think SPX if you want there, give or take. So the week, let's start with Friday. Action was hugely up, although at the end of the day there were some funky movements, a whole bunch of gap downs and gap ups that happened at the close. Citi Group down, Apple down, Intel huge up move right at the close. So I'm thinking this is end of quarter cleanup on options expiration. So I'm not going to look at it until Monday to get more clarity on the subject. I see nothing else that tells me that this was the start of something nefarious for next week because Amazon closed at the highs and that was the junk of the day, right? And Tesla bounced off the bottom, and also fear didn't close at the highs, or at least near the recent highs towards the end of the day. So those one-offs, maybe market makers were trying to seek the 40 round number on the SPX in order to punish the most people possible. Who knows? So I'm not going to pay attention to that last-minute dump or rise until we see what happens Monday. So the week ended. We had doji candles all over the place on the weekly basis. The SPY, I think the weekly was officially green, but everything was green until the last minute. IWM and the Qs were also greenish. Let's see, the Dow, yeah, definitely green. So the good news is that we tried to rally. We failed. That was the bad news. The good news is that we tried to fail big time, and we held as the news was just, one negative thing after another. I mean, what's next? We're going to have natural disaster, some ash in the sky like the olden days. So there was cause. The bears had reason to, but they didn't. So here's my thesis that's been going on forever. The bears aren't even here. All the selling, they're just bulls booking profit. When you have this, people will sell pretty fast. So the trend is still okay. We have levels that have been pivotal. So when we get wedges, the wedges tend to break up or down, depends on which way it's leaning. But the longer it lingers in one place, that break will tend to not happen as violently, but then they can decide to, okay, let's move based on some information. Right now, we're just knee-jerk moves. Headlines from the White House, like 2 days ago we didn't hear. CNBC rehashed the stupid headline that Trump is after. Someone said that Trump is after Amazon. Well, he said that months ago, if not years ago, when he was running. He said that. He has personal beef with Bezos because of the newspaper he owns. So it's much of a bark and no bite, in my opinion. You can't just levy taxes on a company, just that one company, because you don't like the leader. You just can't do that. I don't care how big of a bully you are. It's nothing against the president. I'm just saying the facts right now as I see them. I took the bluff. We went long Amazon on the dip, and here we go. But the point of this is we're reacting knee-jerk to headlines. So the rumor comes out from CNBC. God hate them. I do not love them. They cause a whole bunch of the problems. They create these fictional lines in the sand that we have to react to. And here there was no story. So the White House came out and said, hey, we have no story. There's nothing in the works. And then this morning, Trump decided to say, you know what? I don't like what she said last night on my behalf, so I'm going to say something bad about Amazon. Amazon drops, 4%, whatever it was in the morning. And so we went long Amazon again. And sure enough, at the end of the day, we were green, and very green in that trade. So because, again, the White House said, well, there's nothing new on Amazon. We're just blowing smoke here. We're just venting. Sounds like a personal vendetta, and I used that word in the chat room, and then probably half an hour later, somebody said it on TV, so on CNBC. So the Amazon thing, not an issue for now unless there's a shoe to drop. I am afraid about the Alexa thing because I have the Google version of it, and I think it listens too because I get videos that come up from conversations I have. I don't mind it. It's not like they're stealing my social. If they want to advertise to me based on what I search for or what they hear, I don't care. So Facebook up 4%. That was junk of the day. So all these, I'm mentioning those because those are, I call them crap stocks. So not because they are crap, because the headlines make them as crap. So if they can rally, so the good fundamentals should rally. Stocks like Apple should rally. So as Facebook, we went long, rejection. I'm still scared about the Facebook, but I can book the longs and go long the Qs as a quasi-long on all of them into the earnings. So next will be the earnings. So what I'm saying is The knee-jerk reactions right here are headlines driven, not fundamental driven yet. I haven't seen a headline that is a fundamentally that would fundamentally change the thesis, the macroeconomic thesis for stocks. The Facebook thing kind of comes close, because if enough of those, then they are half of the NASDAQ, at least the top 4 or 5. So therein lies the math that causes me to be, okay, I'm not so optimistic about it. Maybe I'm not pessimistic, but I'm not so optimistic because they can't rally with all these headwinds. But looks like we're shrugging it off. How will that impact their P&Ls? We don't know. So Facebook earning calls might be a little interesting. I'm not going long Facebook into the earnings, expecting upside. I would sell some puts into it if I want to do it that way. So anyway, so the macro hasn't changed. Therefore, I just have to make sure that the short-term risk to my portfolio, whatever it is, a long or short, will survive the short-term gyrations. How do I protect the portfolio? There are easy ways to do that using the options market. So send me an email if you need more information. We can learn. So next week, all about non-farm payrolls. At the end of the week, we will get a peek at ADP. We are off Friday, the U.S. Europe is also off Monday, so kind of would be a funky start to the week. We'll see how it's going to go. I think that if we have no headlines, although that's a tall order these days, we should continue what happened today, maybe not in the same violent way, but I mean, I've said it before, without new bad headlines, the bearish thesis is thin. People say that, you know, everything, all tech is expensive. Well, not all tech. Here's the biggest tech company, and it's definitely not expensive at 17 trailing PE. Facebook is probably 20 now after the price correction. Look at that wick on Friday, right? It dipped, it fell pretty hard. So there are reasons to be concerned just from the headlines, but not from the fundamental basis. Okay, so next week, we should have some good news on the jobs. If you remember on 2-2, the thing that started it all right here was a hot jobs market report, but not so much from the jobs themselves, but rather from the spookiness of wage inflation. This is the new person in the Fed who is not so concentrated on wage inflation as Yellen is. He refocused, in my opinion, onto actual inflation numbers straight up. You know, the typical CPI, not this convoluted wage inflation. Yellen had muddled it up, but he's concentrated on that. My interpretation of things, okay? So we shall see. So speaking of that, rates took a tumble. This is so surprising. This is the 10-year. We are in a rising rate environment. Why would rates fall? Well, we were long the TLT, which is good. That's the opposite of rates. These are bonds. My target was 120, 122, I think. And today, I think the high exceeded that. I exited yesterday, so 1 day early, but it was still profitable. But now, where do we go from here? If I look to the left, this has been a pivot point. So thereabouts lies a decision to be made. In other words, the easy money in this breakout was made, and this breakout was based on two-step breakout. The first one, you see the wedge right there, but the second one is more of a cup and handle. Kind of looks like Cypress, actually, right around here, and technically it should be the depth of this, so which puts us at this level right there. So anyway, this will be interesting next week, because that's what started everything. The dip in bonds, basically the sharp rise in rates on 2.9. Okay, so back to the S&P, so to speak. We are collecting here our thoughts at an important level, but if we lose this neckline, then we could retest the lows. I argue that we already retested the lows by closing lower than the lowest close thereabouts, give or take, SPY, SPX, depends what you're looking at. So are we testing the wick, or are we testing the actual closes? People say, I want to see a retest of the lows. Why? We need another reason to do that. All right, Nick signing out. Oh, if you have any questions, sellspreads@gmail.com.